Welcome to the Swing Trading with Cycles channel. It is January 10th, 2023. It's Tuesday. That's always important because it tells you if the move on Monday was real. Do we get follow through? Do we get a reversal? Or do we just get consolidation? We're going to cover natural gas today. And in yesterday's video, we talked about how we may have a short-term bottom. Turns out that is not the case. I mean, I guess it depends if you consider a few hours a short-term bottom. So just a reminder, if you're new to this channel, central premise is very simple. Prices trend, right? Sometimes they're trending up, sometimes they're trending down. If we can use price action to analyze that trend, we can position ourselves on the right side of it. So this thing has been in a massive downtrend. Since we've been talking about it in like early December, and I'll just draw that out for you so that it's clear. So we had this lower low, tiny lower high, lower low, tiny lower high, lower low, tiny lower high, and so the expectation here is another lower low, eventually a lower high, etc. And so the cycles part of this is really important because it gives you an added kind of reference point. And if you're not familiar with cycles, definitely take a look for a pinned comment that's going to have some video links for you to get up to speed on that. But this idea that we had this cycle that was 30 days, that's what these numbers mean. So that this period was 30 days. This was 33. This was a short one at 21. This was 24. All that to say, the idea that this was our daily cycle low at day 23 would have been kind of early. I mean, like this one. But now it looks like would be day 22, day 23. And so this is important because it gives us a framework to think about, right? So, all right, this is not our daily cycle low. So we're maybe going to get something that's closer to the 30-day range. As we've discussed in previous videos, again, you'll see in that pinned comment, there's a link to those previous videos. But let's think about that, right? Let's think about a scenario as we often do. So if it were to be, let's just say in exactly 30 days, the cycle, we would have our low on, basically January 20th, right? That's a Friday, give or take a few days, let's say. So that tells you'd still have another 7 trading days of downside. It doesn't mean every day is going to be a down day. We could get another few lower highs as well. And it also doesn't mean we have to go to 30 days. That's just a scenario. Again, based on the fact that these tend to be more in the 30-day range. This was longer at 37 days. This was 39. So you also see a scenario where, maybe we go like closer to 40 days, right? And that's like this. That's where this little arrow was, just to kind of give a sense. And so that would be closer to the end of January, right? You can see a world where we don't get our low until after the FOMC meeting in February. But the great news is that while this was not a short-term, while this wasn't our daily cycle low, most likely, I mean, we're going to see there's always the outside chance that we get a little double bottom here, right? That we somehow hold this low and resume up. That seems like a very slim chance. But this gives us a renewed opportunity to get on the short side. And we'll talk about that, how, that could be played with something like Kold, for instance. But this kind of like huge move down, it's just hard to get short in here. I mean, you can get short here, I suppose. That's a lower high, right? But like you want to have some little move up a little bit to sort of absorb supply, right? Like think about I think this was a 20% up move, right? Like from Pico bottom to this. What was that? Okay, so that was 17%. This little lower high was 11%, right? Like, so you get the idea. This little move was, what was that? That was only 8.5%. So you want to have basically you're waiting for a little counter trend rally. So in a downtrend, again, that would mean that we're getting a small little uptrend, right? Because that's what this is. This is a small uptrend on a lower time frame that ends as a lower high. And so this gives us a renewed opportunity to get short. So that's exciting. And if we look at the weekly chart, we talked about that this is either week 10, right? Is that right? 5, 6, 7, 8, 9, 10. Well, actually, excuse me, week 11. So this is either week 11 or it's week 27, right? Like we combine. Now it's starting to look like this is probably its own cycle. And so maybe we get something like a 15-week cycle, and you're starting to see that, like if you think about how that triangulates with the daily, what we just talked about, right? Like, let's say this is a 16-week cycle, just like the previous one. That gets you your low around February 13th. So that tells you that maybe we actually end up getting more like a 40-day cycle, and the daily cycle low is also our weekly cycle low. So let's look at that. What would it mean if we got a low around the 13th? So that would be a 46-day cycle, which is that's not out of the realm of possibility. I mean, nothing ever is really. Price can do whatever it wants. But you can see this cycle here was 39 days, and again, this was 37. So still in that sort of ballpark. That would mean a lot longer to fall. And so we have to think about, what does that mean for potential price targets? Just in general, now that we're seeing that we're going to, again, retest this 350 area, what does that mean for the downside if it doesn't hold, right? So we talked about how long this might last, how deep might it go. And we actually alluded to this in previous videos, right? It's not going to be a surprise. Once we fall below, like you see these lines, so there are a lot of lines here. Let me delete some. Let me get rid of that line as well. So you could see this cluster. So that was around, what was that? October 2020. We made like a short-term top, and then we chopped around for 1, 2, 3, 4, 5, 6 months. That was within a range of around $3.18 to right around $2.40. So it doesn't mean we're going to drop all the way to 240, but you imagine price is going to find itself down into this gap, into this, down into this area, right? Like, I'll draw a candle, right? Like, let's call it like here, right? Now it's a question, do we extend all the way to the downside? And again, just like when we were back up here and it was December and it was like, well, this cluster of pivots looks like an obvious low. This area looks like an obvious low. Now, it doesn't mean it has to be these pivots. Now, that would make a lot of sense. You can see, obviously, price wicked below this a lot, right? Basically, it found buyers here quite a few times. But especially if we have a really long cycle, that certainly does put $2.40 on the table. But I'm thinking more like, call it $3, just below 3. And then, again, you're in kind of no man's land between $3 and sort of $2.50, call it. So that all sets up a great trade for something like a Kold, right? So Kold, K-O-L-D, it's a inverse ETF, so it goes up when natural gas goes down. Let's look at that on a sort of weekly time frame. So this is the opposite of Boyle, right? Boyle, by the way, is going to go to all-time lows, right? It's practically, it was there just a few days ago, right? And we talked about this. That's where these lines are. That if we were going to continue to see a bullish move for natural gas, we would see bearish signals for this Kold ETF. And you kind of want to see that, right? You want to see Boyle acting bullishly, Kold acting bearishly. And so we did make a swing high. We closed below this candle, which was the high at that point. But then look how we closed yesterday. That's yesterday's candle. This is a daily chart, right? Always remember, a lower wick is a rally on a lower time frame. Now, this didn't get all the way to green, but it got really close, right? But it did form a hammer. And then, of course, we've actually gapped up today, and you can see this thing likes to gap. I mean, look at the size of that gap, right? And so off to the races it goes. And if we if we think about the weekly, actually, before we zoom in, so let's just look at some of these other weekly rallies to kind of orient ourselves, right? So this weekly rally, let's say from this point to that point, was 150%. This was pretty short. That was 170%. That was your last really long one, right? That was 195%. And then not even from the Pico bottom, let's say from here to here, what have we rallied so far? So we've already rallied about over 200%, and that's not even from the Pico bottom, but you could also argue this is actually one, like, this is the same, like this move and this move are all part of the same move, right? And so it's really actually, what has the rally been from here to here, which has been about 334%. But of course you have this pullback in the middle. So the point here is that we have obviously moved quite a bit in this weekly cycle, and I'd say we've also moved, like, in terms of from this swing low, 1, 2, 3, 4, 5, 6, 7 weeks up. This was 1, 2, 3, 4, 5, 6, 7, 8 weeks up. This was obviously a lot shorter than that. So you want to be careful as well with this thing, because this is you're getting into the longest rally that we've seen in quite a while, which doesn't mean it can't rally more. All that to say, I would use trailing stops if nothing else. I definitely saw profits evaporate on the Boyle trade for myself personally yesterday, which was kind of annoying. So definitely we'll keep these trades on a leash because, you know, natural gas is a wild trader. So that's kind of the weekly picture. And if we look at the monthly chart, you can see just clean. It's this month was a high before. That's why this candle is this arrow is here. It's obviously not a high anymore, right? Like clearly we broke above this line, right? And so that becomes your line in the sand. Well, obviously, you know, you wouldn't want to put a stop that low, but that gives you the sense of like once we fall below this red line, we're back into bullish mode for natural gas because this is again an inverse ETF. Now your next logical target is this swing high here, right? So call it the 45 zone, right? And then that gets you into potentially 60, 75, that kind of area. Again, it obviously all depends. Is natural gas really going to make a move all the way down to $2.40, for instance? That's what you want to kind of watch for. And if we're thinking about just kind of zeroing in on the trade action this morning, so this is your 5-minute chart for Kold. And so you can see it was flat for the first really 20 minutes. And I'll get the auto off. So pretty flat for the first 20 minutes. Right? Like you did have this big spike up here, which actually is a high at $37.18. And then you just kind of consolidated inside here. Then you have this small inside candle, and then here you're off to the races, right? So in terms of justifying longs, right, you could easily make a case for once you break above this high at 37.18, you could be long here. So far, we've gotten to 38.34, and now we're pulling back here. This is a little bit of a bull flag. But this is very clear in terms of like I'd say the most obvious kind of structure that needs to hold is really that swing high, right? Like once we get below that swing high, that tells you to be cautious. I personally don't like to hold these things overnight myself. So again, which is why I am very big on the idea of trailing stops, right? And I'll show you, again, I like to use the 15-second on these things. Generally, you can kind of see the trend a little bit better, right? And so I'll take the auto off. And so you can see this is that swing high on the 15-second. And then, or I should say, that was that big candle that had the upper wick. That's what happened on sort of the 15-second chart. And then we just kind of drooped lower here, right? But we never made a lower low. And we continued to just kind of essentially consolidate until, again, we broke out kind of above that structure, right? So here you can see the early entry is right, you call it above just above $37 essentially. Now you're not above this wick yet, and so that is definitely kind of optimistic. But again, I think this is all about what's one style, because the principles are the same. You can see this is a consolidation zone. Once you get a sense that you're breaking out, right? Like you can see this is a higher low. That's kind of a higher low. That's a higher low, especially higher than this. And then we start to consolidate a little bit more, try to make another leg up. So you can kind of use that same principle, and you can see actually that's so interesting. You get these little spikes on the 15-second chart. And it's interesting to see them because it kind of gives you a sense of like how strong is the move in either direction. Because you're going to get a cluster of red candles, but are they like really small red candles, for instance? Or is it like one big sharp red candle down? That tells you something different. So this could be an interesting little trade here. Again, Kold. That said, we are kind of pressing the lows here, and so wouldn't be crazy to see a bit of a bounce once we do get down to that, back to that like 350 kind of area. Let's go back to natural gas itself. So I would just say stops are critically important here, critically important as they always are, right? And so you can see, on the hourly chart, we've got a little inside candle trying to go green. And so that's our update for natural gas. Big picture, it looks like the daily cycle is still declining. Again, it could absolutely, this is your daily. You could absolutely see some kind of save where it doesn't make a lower low. Who knows? Right now, that looks very improbable. It looks like pretty clear. This is your swing high so far. Again, this creates your short opportunity, right? This because price was just falling so fast, so far, so fast. This kind of gives a little bit of a chance to reset. Obviously, not much of a chance to reset. It's like the second green day in like 15 trading days or something like that. So there is going to be a bounce at some point that's going to be violent, and we're going to just want to. So if one is trying to play this to the short side, again, very important to make sure that you're prepared for that kind of violent bounce. So we'll leave it at that here. Thanks for watching.